So what is a commodity?
Money, mindset. I think that sounds alright.
So, to continue the football formation asset allocation, the left wing is what we call commodity. So what is a commodity? So a commodity is just things that you find in a basket, so a basket of goods. So think of bread, bananas, wheat, things like Weetabix. So it makes up your everyday shop. So it's important to have a diverse portfolio, and by having things like commodities, it gives that your portfolio a better diversity. So things do better. So things work. Think of like a football team. So players work like a winger can quite quickly moves up and down the market, up and down the pitch quite quickly. Similar to commodities, commodities can move up quite quickly because it's very dependent on demand and supply. What Adam Smith talks about in economics. So commodities are very dependent on demand and supply. So, and there's other things as well. Like, so take your iPhone for instance. So this contains metal, and that helps make a product like the iPhone. But but it contains lots of different metals which people didn't need previously, but now because of the iPhone, that demand has risen massively because there's so many iPhones sold each year. So this affects the price. So the more demand for something, so the more demand for these metals in an iPhone, the higher the price will be. So this is why it's best to have a diverse portfolio, because different portfolios work together as a team. They create something, they create natural synergies where the overall is better than the individual parts, and you get these natural synergies in your portfolio. So just to summarise, commodities, things like bread, wheat, bananas, metals, like gold for instance is a good one to have in a portfolio. These have good natural synergies, and the commodities are the left wing of your football formation asset allocation.
Money, mindset. I think that sounds alright.